The U.S. and China are hoping to strike a deal and avoid a trade war. During last week's high-level talks in Beijing, the U.S. side demanded a $200 billion cut in the U.S. trade deficit with China.
My group just got back from China. We're going to have to rework trade with China because that's been a one-way street for decades, and we just can't have it happen.
The U.S. says the 2017 trade deficit in goods with China was more than $375 billion. China's ambassador to the U.S., Cui Kai, says the trade relationship between the two largest economies is about much more than just the trade deficit.
First, it would be too simplistic to say that trade deficit would mean loss, trade surplus would mean gains. I think the real situation is much more complicated. And you have to look at the whole production chain, the value chain, and international division of labor. But still, too much imbalance in trade. Huge deficit for you and a huge surplus for us. I don't think that this should continue.
U.S. President Donald Trump has threatened tariffs on a total of $150 billion worth of Chinese goods. Next week, the Office of the U.S. Trade Representative will hold 3 days of public hearings on the proposed tariffs. About 130 businesses and trade groups are expected to testify. Most oppose the tariffs and don't want to see this trade conflict escalate. Many analysts say the tariffs will hurt the U.S., China, and many other economies around the world.
There will be a huge reverberation around the globe, and in the United States, the cost of manufacturing will rise because imported components will be more expensive. That means profits will be lower.
The influential U.S. Chamber of Commerce, a private group that advocates for U.S. business interests, released a statement ahead of next week's hearing saying in part tariffs are not the answer. An initial round of tariffs on $50 billion worth of Chinese goods could go into effect anytime after May 22nd. Jim Spellman, CGTN, Washington.